Most people think protecting wealth just means saving dollars in the bank. But what if the dollar itself is the problem? Today, I'll reveal 5 strategic assets that don't just survive when the dollar weakens, they thrive. And these aren't the generic buy gold tips you've already heard. These are globally diversified, actionable moves that the wealthy quietly use to protect and grow their fortunes. So if you want to learn how to build wealth, not just riches, stick with me until the end. 1. Physical gold and amp silver. Let's start with the classics, but in a smarter way. Gold and silver have outlasted every currency in history. But here's the wealth not riches angle. Don't just buy paper ETFs. Physical metals held securely, both locally and globally, are insurance against banking system risks. And here's something most people miss: the gold to silver ratio. Historically, silver has often played catch-up when debt crises unfold. Understanding that ratio can mean turning a defensive hedge into a strategic advantage. 2. Export-heavy US stocks, the weak dollar winners. When the dollar weakens, US companies that sell products abroad suddenly look stronger. Why? Because foreign earnings translate into more dollars. The key is identifying cash-rich multinationals, companies with over 70% of their revenue coming from overseas. Think of certain tech giants or resource exporters. These are businesses that quietly profit from dollar weakness, while the average investor stays stuck in domestic-only plays. 3. Hard real assets, outside the US. Real estate is one of the oldest hedges against inflation, but here's where strategy matters. Owning property outside the US in stable currency zones, like the euro or Swiss franc. That's how you hedge against both US dollar weakness and domestic instability. And don't think it's out of reach. International real estate ETFs, or even fractional ownership platforms, make it possible for everyday investors to get exposure without needing to buy a villa in Switzerland. 4. Emerging market local currency bonds and AMP stocks. Here's one most retail investors overlook. When the dollar weakens, emerging markets often strengthen, especially those rich in commodities. Their currencies rise against the dollar, and so do your returns if you're invested in their local bonds or equities. Yes, there's risk: geopolitical instability, inflation, policy shifts. But with careful selection, high-yield funds in commodity-backed economies can deliver outsized rewards. This is where the wealthy look for growth when the dollar stumbles. 5. Strategic cryptocurrency, the digital hedge. Finally, we can't ignore Bitcoin and Ethereum. But let's separate the hype from the hedge. This isn't about day trading or chasing quick gains. Think of Bitcoin as digital gold, a non-sovereign, decentralized store of value with zero counterparty risk. Ethereum, meanwhile, powers decentralized applications and can serve as a long-term play on financial infrastructure. The key is treating crypto as a strategic slice of your portfolio, not your entire plan. The truth is, relying only on the dollar is the riskiest strategy of all. These 5 assets, physical metals, export-heavy US stocks, foreign property, emerging markets, and strategic crypto, are your toolkit for thriving, not just surviving in the next financial reset. If you found this breakdown valuable, hit that like button. It tells YouTube to push this video to more people who need it. Share it with a friend who still thinks dollars are safe forever. And don't forget to subscribe for more financial intelligence from Wealth Not Riches. Together, we're building wisdom that outlasts the noise.